Good afternoon, ladies and gentlemen. I extend to you a very warm welcome to today's discussion on pain points in the compliance landscape for large business enterprises in India, an initiative by etcfo.com and Clear. So we'll start off today's discussion with an interesting observation. A recently conducted survey by Clear, including 200 large enterprises, shows that 8% of a business's working capital is impacted due to non-compliant vendors and inefficient data reconciliations. Surprising? Well, the major concern to be addressed by the corporate taxpayer is to ensure they plug the point of tax leakage at their end. Conquering the ITC is a complicated solution to a big problem. Well known is the fact that compliance has undergone a complete overhaul. As a key business person, it's critical that you have complete hold and ownership of data that flows through your systems and is reported to the government. Also, there is no scope for manual reconciliations for your GST returns. Besides, you also need tools to stay on top of your vendor communication. So, are too many teams involved in this process? Are outcomes impacted at all? Do you have clear visibility into how vendor non-compliance is hampering your PBT and your working capital? Too many things running on the mind, right? Well, this masterclass brings to you the answer to some such pertinent questions. And to answer these questions, we have with us today S.R. Patnaik, partner, head taxation, Cyril Amarchand Mangaldas. Mr. Patnaik has more than 19 years of experience. He's a qualified chartered accountant and a lawyer. His expertise is in various aspects of direct tax, such as international tax, transfer pricing, and corporate tax. He has also experience and expertise in various inbound and outbound M&A transactions. So with that, a very warm welcome, Mr. Patnaik.
Thank you, Vaisakhi. Good afternoon, everyone. It's nice to be here. Because of the current COVID restrictions, I'm sure all of us are kind of trying to somehow cope with it from our residences. We hope all of you are safe and sound. So I think the broader perspective of what we are trying to achieve through today's kind of workshop is to get a semblance of what all is required to be carried out from a compliance perspective, and I have kind of tried to provide a little bit more context to it, and I have combined some of the income tax as well as the GST matters. But I think like Vaisakhi said, it is imperative that businesses kind of create the infrastructure which would allow them and enable them to do their compliances in the optimum possible capacity, so that they can try and ensure that all the tax credits that are supposed to be available, whether it is in terms of ITC from a GST perspective, or in terms of the TDS that various vendors have to suffer when they are getting paid, are available to them to set off against their overall tax liability, and which not only helps them in terms of managing their cash flows, but also ensures a kind of uninterruptible business flow. So with that background in mind, I think I'll just quickly touch upon the agenda that we have got for you. So we'll firstly start with discussions about some of the major compliances that are required to be undertaken from the perspective of both income tax as well as GST. And then we'll discuss some illustrative instances of income tax and GST, and how they could challenge or ensure the compliances. And thereafter we will talk a bit about the important areas that large taxpayer will have to keep in mind. And then we'll try to talk a little bit more about the key mitigation measures that a large organization can adopt. And lastly, we'll talk a few items of what are the significant issues or challenges that we have seen, and how best we can try and cover ourselves against any such eventual outcome. Now, here again, just to highlight, while we are discussing about a lot of these compliances and the issues that are concerning business enterprises through those non-compliances by either the supplier or the vendor, is the case may be. But I would try to kind of focus a little bit more on point number 5 in my presentation, which is basically the various mitigation measures. Uh, so coming to the compliances bit, I think if we try to look at the various income tax related compliances that we have to undertake, uh, as you would know, ensuring appropriate evidences for specific expenses and major transactions are a necessity for income tax perspective, because once you have undertaken a transaction, you typically proceed with your day-to-day business operations. But what is critical for us to keep in mind is, tomorrow there is a possibility that the tax authorities might want to verify the proper transaction, or if you have claimed a huge amount of expenses, they would like to see the supporting vouchers in respect of such expenses. So they should be, one, readily stored properly, they should be readily available, and third, they should be categorized in an appropriate manner, that we do not kind of provide the incorrect or inaccurate evidence. And at the same time, we should also be careful that whatever information that we are submitting are in sync with the expectations of the authorities. Now, in addition to that, there are significant amount of TDS and TCS related transactions that every organization has to undertake. And each of these have their own requirements. You will have to file certain forms on a regular basis. You will have to carry out the compliances in accordance with applicable law. So that's again another major item of compliance from an organization perspective. Then you have certain annual compliances, like getting your tax audit report done. Since we are talking about large corporates here, I think this is a kind of given thing that almost all of us are required to get our books of account audited, and this is a separate form that is required to be submitted by a qualified chartered accountant, and that needs to be submitted. And what is critical here is not only we are just getting those compliances done, we are also getting those certificates and reports ready with us, because most of these documents are required to be filed electronically now. So it is imperative that we have everything in place, so that we don't fall foul of any non-compliances by not being able to submit these documents within the specified time period. And along with the tax audit report, you are also required to file your annual income tax return, which is the corporate tax return. Then if you have to pay a minimum alternate tax, then there is a requirement for you to obtain a MAT certificate from your tax advisor, and then that also needs to be furnished. In many instances, you actually get it executed from the statutory auditors, but that's entirely your perspective, who you want to get this certificate from. Then there are a few requirements that have been prescribed under the tax laws to kind of to provide the supporting documents, whether in the form of a certificate or whether in the form of a report, to allow you to claim certain tax deduction or exemptions which are available to you under the Income Tax Act. Then similarly, if you have undertaken any slum sale, then there is a certificate from a accountant that is required to be filed, which will compute what is the sale value and what is the cost of acquisition. The cost of acquisition is a slightly important point, because you are required to pay tax on the sale minus the cost on the remainder. So that's again another point that is required to be done. Then if you have income which is accruing to you from a uh, uh, foreign jurisdiction, then you have to ensure that there is a certificate that is required to be obtained. You know, so you need to prepare a statement of income on from a country outside India, along with proof of tax paid outside India, if you want to claim the foreign tax credit. Now, this is again an important perspective if you do have significant amount of transactions, because of one, there could be a different financial year in which you are supposed to pay the taxes in a foreign jurisdiction. So you will have to do that reconciliation beforehand and keep everything ready. And you just need to ensure whenever you are showing that income, you have to also claim the corresponding credit for the taxes deposited by you in those foreign countries along with this. So that's again an important point. Uh, then there are some you may have to obtain some certificates. If you have to make any payment to non-residents, those certificates have to be submitted electronically, what is typically called as under section 195 of the Income Tax Act, and you need to provide all those certificates. So that's again another set of concerns. Now here, if you do undertake a number of international transactions, or you have a lot of foreign payees to whom you need to pay, you would know that how difficult it is to go and obtain a certificate. But irrespective of whether that can be obtained or not, I think we have to take a more pragmatic view. If required, you can obtain a certificate from a independent chartered accountant as well. But I think it's important for you to ensure that there was a requirement for you to obtain this certificate, and if you have not done so, then there is a possibility that you may be subsequently required to justify your position before the tax laws. Sorry, before the tax authorities. Now, in addition to that, if you are a large MNC and you have got offices, over many countries, then you are also required to kind of be clear that there are requirements under the transfer pricing regulations, where you need to either you are providing the master file, or you're required to provide the in relation to each and every constituent entity. Then there is also a country by country reporting requirement. So you will have to obtain the CBCR. Uh, these are obviously over and above the regular transfer pricing documentation that you need to undertake, and you need to obtain a certificate in Form 3CEB for the international transactions. So I think the other documents that are required to be submitted would be also basis whatever you're undertaking from an income tax perspective. And then similarly, we can also kind of switch over quickly to talk about some of the compliances that are required to be done from a GST perspective. uh, there are three, four major criteria. Again, of course, once we get into further details, we would realize that this is not so simple, and this is not there are not only four, there are could be 400 such compliance requirements. But just for simplicity's sake, we have just provided them into divided them into these four categories. So the first one is, the what is a valid GST invoice? Because as you would know, From a compliance perspective, each and every invoice need to follow a particular pattern. There are certain specific requirements that need to be there in that invoice, and hence it is critical for us to ensure that whenever we are raising any invoice in respect of any supply that we are making, then that invoice is prepared in accordance with the applicable laws. Uh, Now, in addition to the invoice, we are also required to file monthly returns. So that's again another kind of related compliance mechanism. Then we need to also kind of talk about the annual return and reconciliation statement that we will have to submit to the GST authorities. Now, in addition to these three broad, kind of returns that we need to comply with, there are other compliances like uh, you have to ensure that what is how do you calculate the input tax credit, whether you are able to take it or not, and then you need to also ensure whether there is any kind of cross charges that you are going to make, and therefore whether you are supposed to raise a debit note or whether you are supposed to raise an invoice, and how do you comply, or what are the additional kind of compliance mechanisms that you need to undertake. These are the other issues that are required to be kept in mind when we are talking about a compliance requirement. So now we'll quickly talk about some of these income tax related compliance requirement with regard to how or what are the challenges that we have seen over this period. uh, the more important point right now for us to keep in mind is almost everything has become automated. Now, while it has its own advantages, we also kind of face the issue of lack of human interface. And most of the times, what we have find out from our experiences, the department typically takes a one size fits all approach, which becomes extremely tenuous when we are kind of trying to get some very basic routine corrections made to the filings that we have done. uh, all of that has become like very very difficult these days, because you don't really know who to go to, who to speak to, and how do you ensure what is required to be done. So these are issues that are required to be taken up very very seriously, because while the increasing adaptation to technology is a good thing from an overall perspective, I think what is equally important is we need to provide the platform for the taxpayer to submit the relevant corrections that are required to be done on a regular basis. And if you are working in a large corporation, you would know how difficult that becomes on a regular basis. And how would you ensure that whatever you are trying to do or whatever you are trying to achieve, you are at the same time be in the compliant behavior. And sometimes, in spite of your best intentions, you are not able to kind of comply with that, and then it becomes even more problematic situation for you, because you do not know who to go to or who to approach if there's an issue that you need to get rectified. So this is one of the issues that the department will have to discuss and try to find out. But at the same time, I think it's equally important for us as taxpayers to ensure that we do not get into a situation where we are unable to comply with our requirements or whatever is expected of us. And therefore it is imperative that we also while we'll discuss that a little bit later in terms of what all uh, uh, additional steps that we need to take. But at a prima facie level, it is imperative that we try to minimize and, if possible, avoid making any mistakes, so that we don't really need to go back to anybody to try to get our stuff rectified. So that's a pretty uh, kind of important consideration for us to keep in mind. Now, we do talk about some of the mismatches done in the TDS and TCS kind of a reconciliation statement. Now, why does that happen? Now, I think there are some uh, manual errors that gets crept into the system, which I think in today's time is fairly easy to avoid, because almost everybody is working in an automated enterprise resource planning platforms, and therefore any possibility of any manual error is significantly less. But at the same time, ultimately, we just need to understand and appreciate that all these technology is being operated by individuals at the end of the day. So the possibility of somebody inputting a particular data in an incorrect manner is something that is definitely going to be there. But I think what we could possibly try to do is to ensure and avoid any such individual errors that are getting into the system, especially on account of some mistaken data entry by somebody. But there could also be some certain conceptual issues which are there inherent in the overall tax legislation that we are supposed to follow. Like, for example, there could be a difference in accounting methodology. So suppose I am a lawyer working in a law firm, and I raise my invoices on you, and you being a corporate entity, you are required to follow your books of account on a mercantile basis, whereas I have the option of following my books of account on a cash basis. So while I may have raised an invoice on you, my accounting entry will begin only when I receive the payment from you. Whereas from your perspective, the moment you receive the invoice, you would probably need to make that accounting entry at that point in time, even though you are required to pay me my invoice after 15 days or after 20 days. So sometimes what happens is, especially when we are getting into the end of the financial year, and at that point in time when we come across any kind of uh, invoices raised by consultants, the as corporate entities, you are always interested to ensure that you have received all the invoices so that you can make the appropriate provisions in your books of account. Whereas from the advisor's perspective, they are trying to ensure that they get their payment, because that's when they would be able to show that entry. But because of this change in accounting methodology, while I may not have booked it as my income, even though I've raised the invoice on you, you could still book it as an income, even though you are making the payment in the subsequent year. Now, the reverse could also happen. Like, you were like, for example, if I am required to pay for some software to one of my corporate vendors, and they raise their invoice, they need to show that as their income at that point in time when they raise the invoice. But I would only book it when I'm supposed to make the payment. And if I make the payment, say, in the month of April, then I would be actually showing this as an expense in the subsequent year. So there could be a mismatch of when you are going to show the income versus when you are going to get the TDS credit. And my TDS certificate, when I issue, I might actually issue it in the subsequent year. But since you have shown the income in the preceding financial year, you would like to show this income in the preceding financial year, so there could be a mismatch. Uh, the same way is from a tax treatment. Like, sometimes, I might show some income in a different year, whereas you are required to show it in a different year. Sometimes it is possible that, I might uh, be raising my invoices on a milestone basis, whereas, the client might be booking it on a consolidated basis. Uh, Now, from a tax officer's perspective, what he is required to ensure is that there should not be double claims of any withholding tax. So, if tax has been withheld once, there should be only one time credit, and there should not be multiple credits being done. But at the same time, what he needs to understand is he should never ever try to deny tax credit for by raising technical grounds. Now, this is an issue which we come across multiple times, in our discussions with our clients, that they are always worried about that they are not being able to claim the tax credit which they are otherwise entitled to. Now, this requires some amount of diligence at both sides, which is the customer as well as the vendor perspective. That we ensure that all of this is done in a proper manner within a specific time period, and we give adequate notice and evidence to the tax authority, so that there is no reason for any kind of a mismatch. And if there is any such mismatch which is there, then we also need to be absolutely clear that we take a very firm legal position. It's not about the amount of tax credit that is not available. I think we need to focus it as a broader issue in terms of what am I required to do and whether I have done it or not. And if I have done it, then I should better get my credit, within the specific time period, and I should not unnecessarily being asked to, kind of, run from, one place to the other, and still be denied of my legitimate tax due. So, if required, we should be prepared to take the department to the court to ensure that they give us credit whatever is due to us. Uh, and similarly, I think the other issue is because everything is automated. So sometimes we found that the tax authorities do not give you any credit over and above what is appearing in your 26As. Now that's again an unfortunate situation, because it was never intended to deny any legitimate to anybody. It was more done with an intention to ensure that everything is validly available to the taxpayer wherever it's required. But somehow it's been twisted and kind of taken it a little differently by the authorities. And this is where I think we also need to ensure that the tax authorities do not get away, and if required we will have to kind of take them to court, so that they get the requisite directions from the court. Now similarly, I think there are these uh, some of the points that we have noticed in terms of getting the TDS credit mismatch, which is basically mismatch of 26As, because either the tax amount was not deposited or the tax return was not submitted by the deductor. Now, this does not mean that deductee should be kind of harassed because of that. So if the department has to take action, then they ought to take the action against the deductor rather than denying the benefit to the deductee. Similarly, there are TDS certificates available, but they do not match. Now, this can be done. This could be the reason, because that there have been multiple instances that you pick the 26As at a given point of time, and thereafter all the subsequent compliances done, or all the subsequent revisions done to the 26As by the deductor is not something that against which I'm going to get the TDS certificate for that. Sometimes everything is done properly, but there is still doesn't match. Or sometimes even if there is an entry in the 26As, there is still the tax authorities decide not to give credit. Then you also find sometimes a lot of disallowances were made in an intimation under 143(1)(a). Now, this is again something which is very, very rudimentary, because the 143(1)(a) is an issue that is required to only take into account the uh, legitimate tax claims by the taxpayer, and only arithmetical inaccuracies were supposed to be identified. But at times we have seen that this goes way beyond its original scope, and they have gone ahead and disallowed, or sometimes they've basically denied the benefit of any tax credit, or sometimes even certain expenses were disallowed. uh, Similarly, I think FTC claim again is many a times all the foreign tax credit claims were disallowed while getting 143(1)(a) notice, and sometimes it is also because of the automation that is there, where even though you have got the relevant certificates, still you do not get the benefit of the foreign tax credit, and this is where you have to we have no option but to go to the tax department, take the tax department to court to get the benefit. Now, there are some other challenges in terms of a 143(1)(a) situation. Now, as you would know, these are like automated responses that you get from the tax department. Which comes from the CPC, mostly from Bangalore these days. So you would just get a notice, saying that okay, this is the amount, on which you have either claimed mistakenly claimed additional credit, or you have claimed certain expenses which is inaccurate, or some other reason, and it it is actually required to identify only the arithmetical error, or a very, very blatant on your face kind of error, whereas we have seen that the 143(1) intimation goes much beyond than that. They sometimes even disallow losses for the previous years, or some expenses which ought to have been disallowed, as per the requirements of tax audit report, but has not been disallowed. So it could be a kind of one has to look at it on a case by case basis. If it is something that was a genuine mistake on the part of the taxpayer, then we should immediately accept that, and take the necessary corrective measures. But if it is done by the tax authorities on their own, without any basis to the current facts of the case, then we'll have to ensure that we get the necessary corrections done. So if we don't agree with the 143(1)(a) intimation, then we should submit our supporting claims with our objection to the adjustments made under 143(1)(a), and we need to provide this within the specific time period, which is 30 days. Now, there are also some other challenges one foresees these days, because of again the specific automated data that is available with the tax department. Because as you would know, a lot of data which representing the statement of financial transaction, or SFT, uh, all these documents were submitted by the corresponding players with the tax department, and the tax department sometimes does a reconciliation of what is submitted through these agencies and your own individual corporate tax return. And then because these transactions sometimes get to kind of significant uh, amount of data, sometimes there could be a kind of uh, challenge in terms of inputting the data. Like for example, I have seen instances where one individual actually bought one single mutual fund for one instance, but the same transaction has been reported, like say 5 times in the SFT that was submitted by the concerned entity. Now these are the kind of errors which creates a huge amount of concern, because you would not be in a position to kind of object to it, because you are not even aware. And many a times we kind of tend to ignore the data that is there available, because some of this data is also available in our 26As, and we don't always try to get onto the data and try to ensure that all these matches are done on a regular basis. And as and when we come across any eventual disconnect, we go back and we try to have them rectified within the specific time period. But because of whatever reasons, if there is a mismatch, there is a potential tax adjustment that one can expect, or at least there could be a series of questions that that might be asked, and we should be prepared to kind of provide the responses. So therefore, as a corporate entity, it is your responsibility to ensure that whatever information that appears in the tax portal, we need to be comfortable with those numbers. And if we are unable to kind of understand some of those entries, then we should be kind of better place to go and have that discussion with the authorities, so that there is no challenge in relation to that. So I think again there have been some additional changes that have been introduced with effect from July 1. I'm not getting there, but basically I think the TDS rates have changed, and typically what happens is mid-year, if there is a change, that kind of puts a lot of strain and as well as constraints on the taxpayer. So we just need to be clear and be ready and be prepared to kind of ensure that all these changes are introduced into our system, so that whatever subsequent taxes that are required to be withheld, all of that has been corrected, and we follow the correct we apply the correct rate, and with all the correct amount of tax. uh, Now I think the other issue is sometimes there is a tendency on the part of the tax officer to kind of immediately start recovering the money if he believes that there was additional tax that is required to be payable by the taxpayer. And I think this is something that has been clarified multiple times by the CBDT as well as by the courts, but still many a times the tax officers take a contrarian position, and we just need to be clear and ensure that all those steps are adequately objected to within the specific time period. The other point is, again, I think if we look at what are the rights that we have got, I think it's important for us to keep in mind the taxpayers charter, which was introduced along with the Finance Act 2020, which basically says that you cannot kind of recover anything which is other than which is provided under the law. And therefore it's important that we also work in reconciliation with the tax department, so that there is no additional recovery, or there is no shortage of taxes that are required to be done. Uh, Now we'll just quickly get into some of these specific cases. I think due to paucity of time, we'll try to jump over to the other issues. But very quickly, I think one of the points that typically we have found out is the tax authorities most of the times they resort to a hyper technical ground to disallow something, and we have identified some of these cases just as a representative of what the position could have been and why it was disallowed. And at the same time, I think the broader concept and construct remains the same, that they cannot take hyper technical grounds to disallow something which is otherwise permitted to be allowed. So I think we'll probably skip over these case laws, which I'm sure ETCFO is going to forward this immediately after the presentation, so you can look at them at your leisure. And then if you have any questions, please feel free to come back to us. I think we'll quickly get into the GST bit. Again, I think there are number of instances where we have seen why ITC has been denied, or sometimes whatever is permissible to me as a taxpayer has not been allowed to me. So we'll need to get into even for a minor mismatch, we have seen the tax authorities not allowing me ITC. It can be because of as simple things as you know uh, there is a difference in terms of the GSTR 1 and the GSTR 3B. So if there is a difference between the two, it is generally taken as not being available. At the same time, I think every time there is a mismatch, it is the responsibility of the taxpayers to go and provide the reconciliation statement. And sometimes we'll have to take this additional precaution just to ensure that there are no uh, outstanding tax issues that are there. So now, in terms of some of these illustrative issues that we have seen from a GST perspective, is again, what are the hurdles that one experiences in terms of claiming input tax credit? This becomes a very tricky point, because you do not know why the tax officer is not allowing you to the credit. And sometimes some of these issues are very conceptual, like for example one of the points which basically requires us to ensure that we avail the ITC within a period of 180 days from the end of the financial year. Now that at times could become challenging, especially if the supplier has not really deposited the tax, so I may not get the credit for no fault of mine. Sometimes I am not even allowed to get the 100% credit, and I am only entitled to claim only a proportion of the credit, and that could mean that I am not in a position to claim that entire 100% of the tax credit available to me within this specific time period. There is always a possibility of mismatch between GSTR 2A and 2B, because 2A is an automated process which keeps on getting revised depending on as and when the changes are submitted, whereas Gstr 2B is something that gets generated within the expiry of the specific time period, and therefore the possibility of there being a mismatch is something that cannot be ruled out. Then you also feel, there could be a blockage of credit, and sometimes there is a mandatory requirement of 1% cash payment, which again is provided under law, so we have to just adhere to it. There are instances where there can be reversal of ITC, or ITC restrictions under uh, you know that there can be a restriction in terms of how much of tax credit that I can claim, either under the act or through rate notification. And then sometimes non-implementation of return form is absentee of matching concept of Gstr 3B as a proxy to Gstr 3 could result in disallowances of ITC. So I think what is critical here is we have to ensure that the purchaser has no control over the seller, right? So if I am buying some product, and I am supposed to pay the full consideration to the seller, and once I have done that, I should, for all technical purposes, be entitled to the credit. There is no reason why my ability to claim credit should be questioned, or should be kind of subjected to any further scrutiny by the authorities. And this is basically kind of results into this concept of what impossible performance, because what you're expecting me to do is something which is well beyond my jurisdiction. I cannot even force the seller to claim whatever is required to be claimed. And then if the tax authorities subsequently decide to deny me credit because of that fault of mine, it's very, very unfortunate. And this is something that has been kind of clarified by various tax authorities at multiple forums. And also the courts have given very specific and explicit directions, but in spite of that, we have seen some of those instances happening. And therefore I think it's important that we keep in mind all those concerns here, so that tomorrow, if we were to come across any such eventuality, we are able to recover this. Now, just as an example, if you see this in the subsequent slide, if you see the rates that are there, uh, you know you would find that there are these uh, you know the changes in law, or the changes in the process, and sometimes the changes in the rates creates a significantly complex situation for a taxpayer. Like from 20% to 10% to 5% to zero, makes it extremely difficult for a taxpayer uh, in a regular situation to be able to kind of claim such benefits. So we just need to be careful before we actually kind of try to uh, get this clarity. Now, again, if you see what are the objectives of this ITC, kind of denial, these positions have been challenged multiple times. Like it is arbitrary, it is unconstitutional, as it is also beyond the provisions of the CGST Act. Now, these are issues that will have to be tackled at a different point of time, depending on what are the challenges and issues that one foresee. Also, the difference between GSTR 2A and 2B, as we discussed a little while back, 2B is kind of a frozen. So once the return is submitted, within a specific time period, the GSTR 2B comes out, and that becomes the final form. Whereas Gstr 2A is a more evolving one, and depending on whenever there is a change, and you go ahead and file a revised return, automatically the Gstr 2A form keeps on getting revised. And therefore, ultimately, what you would experience is that there is a GSTR 2B, which is a static form, and whereas there is a GSTR 2A, which is a continuous form. And then you will find, because of the mismatch between the two, you don't get the benefit. Now, I think the other point is again, what is a the other point is with relation to the date of last date to avail ITC. As we had discussed, there is a requirement that I need to claim this within a specific time period. But sometimes what happens is unless and until the supplier actually pays the tax, files the return, and fills in the correct particulars, I as a buyer, I will never ever be able to get the credit. Now if that credit is not available, then it creates a significant amount of cash flow challenges for me as the buyer, because I have already completed my part of the obligations by paying the full money to the supplier. But if the supplier doesn't file the tax returns, then and because of that, I am denied my tax credit. That becomes a rather unfortunate situation. So which is something that that should be avoided under normal circumstances. It is also important that this is where I think the vendor classification for a corporate becomes very, very critical. Who you want to deal with, and why do you have to deal only with reputed vendors and reputed suppliers, reputed customers? I think these are some of the highlights of that, because unless and until you deal with fairly prolific and kind of legally compliant clients and vendors and customers, you would always find this kind of day-to-day challenges that you will have to spend a significant amount of your bandwidth. And therefore many corporates have decided to actually significantly up their own vendor diligence requirements. And they would not like to kind of deal with small time vendors, because that's where it becomes extremely difficult for them to kind of ensure legal compliances of all those vendors, because any one of them not complying with their side of the bargain could compromise on the corporate's ability to comply with the law. Now, I think there is also this power to block ITC, which is again being introduced, which again creates a large complex situation, because I think when they want to kind of decide to block the ITC, I think at times they go purely on a bookish manner. And while the law allows them only to block it for a specific period of 1 year, sometimes we have seen, and as a practical situation, it does not get lifted, and your ITC, while it is available to you, gets blocked for an indefinite period in spite of your regular follow-up. So you have to ensure that whenever there is a entitlement of ITC that you have got, you are able to kind of ensure that whatever is required to be done, you are in a position to go ahead and claim those benefits, so that there is no challenge in terms of your ability to claim the ITC credit. Now, here we have just tried to highlight some of the commonly disputed ITC under these situations. So GST paid by companies engaged in leasing business for construction activity is something which has become a legal point, whether you should be entitled, whether you should be able to get this benefit or not. Similarly, for GST paid on acquiring leasehold rights is again another challenging subject. Then you find something called a invisible loss during the manufacture. If you are from a manufacturing concern, you would know that it is extremely difficult and rare for you to be able to do a gram by gram and item by item reconciliation. There are certain invisible kind of loss that always happens, and then sometimes you get this challenged by the authorities, where they say that how can you you know kind of lose some of your own products. Similarly, when there is a input for a promotional scheme, you sometimes do not get credit for the same. And then also the amount spent in connection with your CSR activities, you you do not get in the GST credit for the same. Now I think there are some quick comments about ensuring that you get optimization of your credit. We should try to ensure that avoid always accumulation of credit beyond a particular level. You should try to manage your workflow in a way that your procurement strategies are designed to ensure an optimum amount of ITC available to you at any given point of time. And you should also try to avail ITC after a thorough confirmation about the availability. You have to uh, ensure that the manner of utilization of ITC is also something that you have done through a proper competition mechanism. Uh, you also need to ensure that there is a reconciliation of ITC that happens from your three different sources. One is the books of account, which is basically your regular financial statements. Then you have got your GSTR 2B as well as GSTR 3B, so that there is no ambiguity amongst them. And you also need to ensure a very, very formal and regular follow process with your suppliers, so that something that is available to you is not to be denied to you. Uh, then we also come across instances of transfer of ITC, which is generally the case when there is a corporate restructuring that happens, because you are entitled legally to carry forward and claim it in the in the successor entity. But at times what happens is, because of the the process and the systems involved, sometimes you are not sure about what are the documentation that is required to be done to be able to claim those benefits. I think it's important and imperative that whenever you are undertaking a corporate restructuring transaction, please ensure that you are equally ensuring that all the compliances that are required to be done, so that you get those without any subsequent challenges. The other point is, again, there is no mechanism for apportioning ITC in respect of any transfer other than the merger. So if there are some part of the undertaking that is getting transferred, or if it is a asset regular asset sale or asset purchase transaction, then you might come across a lot of complexities in terms of what you are going to get. Similarly, the value of assets at registration entity level as well as at a pan India level could be different, and therefore you might want to do a reconciliation before you could claim it. You also need to ensure that they are all registered. You do not want to have a situation that, okay, there is a company which is incorporated in the state of Delhi and has office branches in say Mumbai and Bangalore, but is getting acquired, or the business is getting acquired by another company which is actually registered in Chennai and has offices in Andhra, Telangana, and Kerala, and therefore, because of mismatch of the corresponding scope of operations, you might get into challenges in terms of getting the benefit. Also, I think what is critical is you just need to be careful about the relevant date for the determination of asset value. Uh, Primarily in the context of a demerger, whatever is the date, it should be the appointed date, and you should not kind of miss on that. Uh, Now here again, what you need to kind of keep in mind is what is the relevant date for transfer of ITC, and you have to also ensure that there is an apportionment of the available ITC under the relevant heads, that is the IGST, CGST, and SGST, so that there is no unnecessary complexity that arises after the transaction takes place. Uh, the other issue that we also get to here is about this ISD versus cross charge. Now, if you are a kind of a part of an organization which actually undertakes this, then who do you want to kind of benefit, and on what basis? What is whether you would be raising a debit note, or whether you would be raising a invoice? How would you charge GST, or how would you claim credit of the taxes? I think these are the issues that are uh, required to be analyzed very, very carefully before an appropriate action is taken. Uh, the other specific issue in relation to this thing is also availability of GST credit. Now, I think you need to be careful about, because the GST legislations lack the mechanism to adjust GST paid under wrong head with the correct head. The supplier is also required to deposit GST under the correct head, and you cannot claim refund of GST under a wrong head. The issue with regard to this time limit of 2 years from the date of payment under wrong head, whether it is going to be also applicable to uh, you know uh, to a refund which was claimed under the wrong head is again critical, because it is possible that we may see a situation where I have actually claimed a refund, but I have claimed it under the wrong head. Then would my 2-year time period start from the day on which I originally filed my first application, or whether it would be calculated from the subsequent application? I think that's again another issue that is required to be done. I think the other point is again refund issue for SEZs. This is again a critical point, because most of the instances that one would experience with SEZs is that they don't have to pay any input tax, and if they have paid some input tax, then they are supposed to get a refund of that. But many times, this leads to a significant amount of time lag, and we have seen almost all large corporate entities, kind of having a huge amount of, GST refund due to them, in respect of, the refunds not being issued to them within a specific time period. Now, I think we'll quickly kind of not talk about some of the issues that are experienced by larger organizations, which is basically that one is this large taxpayer unit, which was introduced with a very, very laudable intent that we would have only the largest of the taxpayers, coming in a particular, jurisdiction, and the specific tax officers were supposed to act as the pointsmen, and they were supposed to resolve all their issues. But what we have seen is that it has resulted in significantly significant amount of chaos, because there was uh, you know uh, there was a lack of coordination between the income tax and the indirect tax authorities, and then immediately after implementation of GST, I think this construct was withdrawn. But this was a very, very important and well thought out strategy. If we can try to resolve those practical difficulties and try to ensure that all those processes are put in place, I think this might be a fairly good option for us to continue on a going forward basis. The other point for a large organization is there are large number of offices, units, godowns, branches, all across the country, and each of these units are required to undertake their own set of compliances. They need to collate, they need to reconcile, they need to consolidate, and then ultimately they need to also correlate the data and then forward it to the head office. I think this kind of raises a large number of challenges and issues, and the only solution that I can think about is probably automation, and automation with the right and a known enterprise software, whether it is uh, you know one or the other software. I think that's a attempt that you can make depending on your requirements, because what I understand is there are certain softwares which are fairly easy for you to kind of manage your data, but it may not be so easy for the others. So I think depending on what your requirement is, please spend considerable amount of time before you actually select the correct software for your organization, because once you have done that work diligently, I'm sure your subsequent activities would be significantly you know minimized, and you don't really need to spend unnecessary amount of bandwidth in kind of reconciling data or trying to you know get different kind of products from different or different reports from different ERP packages and trying to have them reconciled, because that's where the most of the challenges arise. It would be ideal if everything has genesis linked to one particular software, so that you can collate and recover the data at one place and ensure that that's done. uh, I think the other part is again from a payroll perspective, large number of employees, you might have a fairly complicated complex remuneration structure. You might also need to hire independent consultants to help you out. I think the answer to this, in my personal view, is again try to have this automated. Do not try to engage a third party for the uh, heck of it, because I think what is critical is your business better than anybody else, and if you are unable to manage the payroll on your own, it is going to be even more difficult for a third party to come and manage. And I think what is also critical is there may be lots of other modules which are linked to the payroll module, like you might have expense reimbursements, or you might have business expenses getting linked to the payroll process, so that the concerned employee who spends a large part of his time traveling across the world or across India, is able to provide all his information in one process, and then you also get it linked to the payroll data, and you can probably process everything at one go, through one kind of statement to the employee, rather than having to do it in a multiple different ways and multiple different types. uh, uh, I think the other point again is basically about whatever deductions, exemptions that are available to you. Please ensure that you have taken adequate steps and measures to ensure that all those deductions and exemption related calculations are all ready. And if it is required to be kind of verified or certified by a third party chartered accountant or your auditors, then have that done before time, so that you do not have to kind of struggle at the last moment, running helter skelter, when if with proper planning you are able to get it done as soon as possible. I think that would be the best possible solution. Also, I think there are you have to ensure that dividend to your investors are also done on a timely manner. Withholding of tax will have to be done. Whenever you are setting up a new entity, you need to have the processes and systems in place, so that the subsequent compliance mechanisms are all there. Similarly, if you want to hive off, please prepare chart in respect of each and every service line, to ensure who all needs to do what, so that ultimately once the specific transaction is over, or once the specific hive off is completed, then you don't really need to worry too much about the subsequent kind of compliance mechanisms that are required to be undertaken. uh, I think the other challenges are in terms of assessments and appeals. I think one of the biggest challenges that one would foresee is because of this faceless assessment as well as faceless appeals. And as you would know, also very recently they have introduced the appeal to the ITAT also is likely to become faceless. Now, once all of this happens, then we are talking about a situation where almost everything happens without any manual intervention, and probably you may not even get the ability to go and explain your case, to the authorities on a standalone basis. Now, that creates its own set of complexities and complications, because what you were otherwise used to explaining the officers in person, you now have to submit the same through documentation, and you don't even know who's reviewing that document and what is his perspective when he's looking at it. He might not understand what you are trying to claim and suggest, and therefore I think it's very very important that we'll have to change the manner in which we are approaching our appeals and our assessments. We should prepare the documents, keep them in a orderly manner, which should be available, within a few minutes of it being asked to, and then we also need to prepare it and submit it to the authorities, within the specific time period, because not only we do not have the ability to interact with the officers, we also don't know who to call or who to talk to, because everything happens on a through a system. You don't even know who the other person is on the other side. uh, and I think the other issue that is equally important is when we are trying to prepare our own documents, we should prepare it in a way that it is uh, mm, it is easy to understand and comprehend, and therefore we should be able to expect that the tax authorities would also be able to equally understand them, because if there are any such challenges, then we should try and seek a in-person hearing from the tax authorities. Uh, as you would know, there is a large amount of litigations that have been filed all over the country, and in most cases, the courts have held that okay, if the taxpayer has requested specifically for a in-person hearing, then it is the responsibility of the tax authorities to allow them one. But since we are getting into a seamless faceless mechanism, I think it's also important that we have to make necessary corrections at our level, so that whatever we could explain it on a face-to-face meeting, we should be able to explain it through our documents. I think some of the mitigation mechanisms. I think what is important is foreign companies might face a fairly large risk of being regarded as non-compliant, especially if the documents are not available, and we are claiming to be kind of storing all our documents in the cloud, which is again technically the situation or the status of those documents might be nowhere or everywhere, depending on how you want to look at it. uh, there are also situations that are pretty common in large corporates, that you typically hire employees and consultants throughout the world, and sometimes especially in today's times of COVID, they actually render services from wherever they are. It becomes very difficult to understand, and therefore accordingly apply what is the relevant taxable situation. We are also experiencing a lot of challenges, because the government is in the process of reviewing the digital taxation policy. So you would find situations where earlier it was clearly not taxable, now could become taxable. So it's important for all the large corporate entities to be absolutely on the job in terms of what are the recent developments and how best it can impact their day-to-day operations, and therefore you are ready to uh, comply with the applicable laws, to the best possible options. I think the other point is try and automate to the extent possible whatever you can, because that would ensure accuracy, efficiency, as well as timeliness of whatever you're planning to achieve. uh, Doing it manually, doing it through multiple modules and trying to do a reconciliation at the end of it is a Herculean task, and it is not recommended in today's time and age. I think I'm sure you would be able to identify a proper vendor who can, kind of provide you with a ERP package that should be able to meet most of your requirements, if not all, and then you should be able to ensure whatever is required to be done. You are able to do them, so that there is no issues or challenges in terms of implementing whatever you're planning to implement. uh, what is critical is identify the right software, and then ensure that there is adequate amount of top level management bandwidth is put behind it, so that people are adequately and appropriately trained. And then you should also ensure at a top level that they are being implemented on a regular basis, and if there are any issues or concerns that are identified by the team, you have the ability to kind of capture it earlier, and you should be able to ensure that appropriate corrective measures are taken within time, so that you don't have to unnecessarily kind of discuss or decide about what to do at the last moment, because that's the time where almost every concern organization would be fighting against time to meet their requirements. So whether you are going for an Oracle, or whether you are going for an SAP, or whether you are going for some other software being developed by, say, an Indian software company like Wipro or TCS or Infosys, that's entirely up to you. But I think what is critical is you create your organization roadmap in a way, and you write down your problem statement in the most simple and effective way, so that the person who is helping you to automate into a new package is able to understand, comprehend, and therefore provide you with the solution. And once it is implemented, preferably you should try and have like two parallel processes running side by side. And once you do a proper testing, ensuring that okay, this the new software is able to take care of all your requirements, only then you should shift on a whole scale basis. Otherwise you might end up having uh, a is even more difficult position for yourself and your employees. I think we'll just quickly kind of summarize in terms of the some specific takeaways. I think it's important that we have to have a proper management information system in the organization, because that MIS is going to give you the report of what is being attempted, what is being done, and what improvements that are required to be done. We also need to have the checklist shared with the topmost guy in finance and accounts. Could be the CFO, could be head of tax or head of finance and accounts, whatever is the concerned designation. I think it's important that the involvement of the CEO, CXO level people is evident, because that, and once you tell them that okay, there's going to be a compliance report that is required to be submitted, and more importantly there is going to be an exception reporting, which means even if there is a 0.0001% of irregularity or kind of error that is noticed, that exception report should be reaching directly to the head of the organization, or at least the top level organization, so that it becomes imperative for the people down below. They get the message that okay, there are extremely senior people in the organization who are interested in ensuring that we are complying and we are doing whatever we could do. You also need to kind of prepare the legal kind of structure flow chart, uh, clearly assigning which responsibility to which person, and therefore who is going to report to whom, and how the concerned documents and statistics can be shared between the employees and the senior people. uh, it's important that you need to also consult your income tax, your GST, your customs advisors, so that everything that is incorporated is done after taking inputs from each and every person, so that there is no way anybody can come back and say okay, look, I don't know who did this, or why it was done, because this is something that is against the law, or this is something that my views were not taken. I think it's important that we may delay the implementation a bit, but we should take adequate inputs from each and every person. uh, Similarly, I think the GST amount, withholding the GST amount until the supplier has filed its outward returns. I think this is something that is probably again an important point that needs to be kept in mind, and uh, because there are also some legal requirements that then MSME supplier has to be paid within the specific time period, and if there are any outstanding payments due to them, then all of that will have to be done at a much faster pace. So we'll have to ensure all of that. And then there is a mechanism that needs to be developed to ensure a vendor rating system is in place, so that ultimately each and every one of your vendors are appropriately authorized and kind of adequately compensated, so that there is no challenges or issues with regard to what is the input tax credit that is available to you, whether they are filing their tax returns within time or not, and whether we are entitled to claiming our benefits or not. So if you could take some of these steps, I'm sure it would go a long way to ensure that you are compliant to the extent you can, and you're also similarly equally prepared to fight it out if there is a requirement. And that would probably the most ideal situation at the end of the day. That brings me to the end of my presentation. Uh, if you have any questions or queries, please feel free to check with me. And because of paucity of time, if you're unable to raise your queries right now, please send your queries by email, and we'll try to respond to them as soon as we can. Thank you so much, and look forward to receiving your questions or queries. Thanks.
Well, that was quite an interesting session. Thank you, Mr. Patnaik, for being with us today. We definitely got to learn a lot from the perspectives that you have shared for the last over 1 hour. And with that, we come to the end of today's webinar. But before we wrap up, I want to wish all our audiences safety and the best of health. Team Economic Times wishes you all a more positive, brighter tomorrow. Stay safe, everyone. Thank you.
Thank you.